What do these companies actually do? Are they leaders in their industries, or are they struggling to keep up? Are their markets growing, or are they shrinking? The answers to these questions are crucial because the value of ANPA is really the sum of its parts. The best place to start your investigation is with their SEC filings. These documents are packed with details about what ANPA owns, how much those assets are worth, and how they're performing. Pay special attention to the net asset value, or NAV, which is essentially the total value of all the company's holdings minus its debts. Compare this NAV to the current stock price. Sometimes you'll find that the market is valuing the company at less than the sum of its parts. When a holding company trades at a discount to its NAV, it can look like a bargain. But be careful, this discount often exists for a reason. It might signal that investors are worried about hidden risks, such as opaque accounting, hard-to-value private businesses, or management decisions that haven't paid off. Sometimes the market is simply skeptical about whether the reported asset values are real or achievable. The future growth of a holding company like ANPA depends almost entirely on two things: how well its underlying businesses perform, and how skillfully management allocates capital. This means you're not just investing in a collection of companies, you're also betting on the leadership's ability to make smart decisions, buy and sell businesses at the right time, and reinvest profits wisely. But with this structure comes risk. The more complex the web of subsidiaries, the harder it is to see what's really going on. If ANPA owns private companies, it's even trickier. Private businesses don't have to disclose as much information, so you're often left guessing about their true value. Add in the possibility of poor management or a lack of transparency, and you have a recipe for potential trouble. Ultimately, investing in a holding company is a bet on the people running it. You're trusting them to make smart acquisitions, to know when to sell, and to keep the whole operation running smoothly. Their track record, reputation, and incentives matter a lot, because a single bad decision can ripple through the entire portfolio. For most investors, the sheer opacity and complexity of a company like ANPA can be overwhelming. It's easy to get lost in the maze of subsidiaries, cross-holdings, and financial jargon. If you don't have the time or expertise to dig deep, you might find yourself in over your head, unless you have a clear understanding of what's inside the vault, meaning you know exactly what assets the company owns, and you trust the management to act in shareholders' best interests. Investing in a holding company like ANPA can be a risky proposition. It's not for the faint of heart or the casual investor. This is not a simple investment. Proceed with caution. Make sure you do your homework, understand the risks, and don't be lured in by the promise of hidden value without knowing what's really under the hood. Sometimes complexity hides value. Other times, it hides trouble. The challenge is figuring out which one you're dealing with before you invest.